Hey guys, what's up? This is Tony Shea from alphapursuits.com. The market broke through so many resistance this week and just kept going up. This is the kind of situation people would say, look, technical analysis just doesn't work. Is that the case? Let's talk about it. Stay tuned. This information is for informational purposes only. Please do your own due diligence before placing any trades. So as always, let's start with VIX-related indices. So looking at the VIX to VIX-related indices ratio. So here's the ratio calculation, and then on top of that, there's the percentile rank calculation. So we are comparing the data to 1 year historical data and see how high or how low that ratio calculation for that particular day is high or low. And the reason that we do this is just like financial, fundamental analysis, PE ratio, price to earning ratio. That tells us whether a stock is cheap or not. In this case, we are doing the VIX against VIX indices to see if the sort of volatility, hedging activity is high or not at this time. And looking at this percentage is still remaining around 50%, which means, yes, there's still hedging going on. People are still not sure what's going to happen. So there's still definitely a substantial hedging is going on. And considering, looking at the historical data, they could spike up to 70-80% easily from 50%. So it's still, there's a still possibility the market will drop from here, obviously. And here's the other table where we are looking at percentile rank of each individual indices. So here's the VIX, VVIX, VIX 90, and so on. And just to note about VVIX, so this is looking at the volatility of volatility. So what it is it's basically, it's calculated from using VIX options. So what this tells us is that currently the volatility of VIX options seems to be sort of back to normal. This is sort of the historical level. This is sort of the normal value, average normal value, I would say, around 80. So it's pretty low comparing to the recent history, obviously, because, there was a huge spike here and there, Omicron that happened, and other things, obviously. So what this tells us is that right now the VIX options is pretty cheap. And so if you want to open certain strategies using VIX options, you might want to consider sort of the buy strategy rather than sell option strategy. And another question I guess you would ask is, so does this mean VIX will not spike? And the answer to that is absolutely not, because the relationship between VVIX and VIX, they are not really correlated except at extreme. So when VIX spikes up, yes, VVIX does spike up. But as you can see right now, VIX is still at sort of historically high level, yet VVIX is already dropping down to sort of the average. So the correlation between them isn't, 1-to-1, 100%, obviously. So anything could happen. Not just because VVIX is sort of back down to this level does not mean VIX will not spike up all of a sudden. I just want to put that out there. And looking at VIX 90, obviously, this is only looking at 9 days forward-looking volatility. It spikes up and down quite rapidly. So it looks like, yeah, anything could happen. But interesting enough, looking at VIX 3M, VIX 6M, they are coming down gradually. And sort of looking at the events coming up, at least, for next week or the week after, they're on that sort of a big event coming up. So I guess this is sort of getting, that data is fed into it. Of course, there's the midterm coming up. So who knows where this is going from here, but as of now, it looks like it's steadily coming down. So the hedging is decreasing somewhat comparing to sort of few days or even last week. Okay, so with that in mind, in case you're interested, so up till now, I was doing this manually using an Excel file, but I have managed to automate it. So here's a page that has those tables hosted. In case you're interested, please check it out. I will include the URL in the description. And also, in case you're interested in finding out more about why we should monitor these values and what's VIX 90, VIX 3M, VIX 6M, there's a page about that. I will include that URL in the video description as well. And before we move on to S&P 500 technical analysis, I would like to share this with you. So this is the sort of market sentiment historical data. Typically speaking, this is from Sentiment Trader side, and you can see in August the average return is 0%, and then of course in September, that's really the months out of the entire year that's negative return. So these are coming up. So with that in mind, when we look at the recent uptrend, sort of it really zoomed past the 50 days moving average, and also broke through this midterm downtrend, and now it's really getting closer and closer to this 200 moving average. This will likely be the next resistant level, but since it went up so fast, first of all, you can see the distance between this and this uptrend line here. It's way up, and typically when this happens, they tend to come down a little bit to the uptrend level from technical analysis speaking. So with those things in mind, August is coming, September is coming. I don't really see, again, this is personal bias, I don't really see how this is going to continue. With this velocity, with this speed, it should come back down most likely next week, if not the week after, to a certain level. And we still have a small gap down here that needs to be filled. Of course, it doesn't need to be filled always, but typically speaking, looking at these gaps here, obviously they got filled with this uptrend. So with that in mind, personally speaking, I do think this uptrend will not last forever. It should start turning pretty soon. And another thing we need to address here is the perception of technical analysis doesn't work. So again, technical analysis, I've been saying this over again and again in different places at different times, that technical analysis does not predict the future. What it does is it provides actionable points for us to take action. So let me explain what I mean by that. So when this was going up, and up, obviously broke through at this point here. So at that point, the trend was broken, right? Because we're looking at this uptrend. And what we want to do is really observe whether this will stay down here or whether this is going to come back up. And obviously, for some miracle reason, it went back up. But at the point when it broke through, there are two things we could do. We can watch and monitor for a few days, or depending on the time frame you're trading, you want to sort of start moving into the other direction, since everybody has directional bias, obviously, in mind when you're trading. And so that tells us, okay, something needs to be done at that point. Then when it went back up, again, something needs to be done at that point. And most recently, obviously, it went down a little bit here, broke through the 50 moving average, even though it broke up to the top and then came back down. So at this point, again, what should we do? There are certain actions we could do. We could start sort of getting rid of some of that uptrend, the positions that prepare for the uptrend. You might want to close down some of it so that in case if it moves, continue to move down, you will not lose as much. And obviously in this case, in case if you thought the market would actually not go up, at the point when FOMC meeting, it zoomed up, and then again, there were some earning reports that came out. Despite the negative nuance of those reports, the market just kept going up. So at that point, you probably want to do something rather than do nothing and say, well, technical analysis doesn't work. Because technical analysis, again, provides us and tells us, okay, what we thought should happen didn't happen. We need to do something. And it's useful in that regard. And of course, this is not 100%, even though it does do a pretty good job predicting, what should happen, what shouldn't happen. And so coming back in this case, it didn't happen based on the technical analysis. It didn't happen. And what should we do? We should obviously pare down the positions in case if you are shorting it. And you might want to get out, step on the sideline, watch it a little bit. Maybe once it hit 200 moving average, you might do it, you might not. If it does, that's a resistance. If it doesn't go up, obviously it should come down a little bit because looking at the chart here, there's nothing much in between. So it might drop down quite a bit. Again, there's a small gap at the bottom. You might go and feel that. And based on those analysis and those data, we could take certain actions. You might want to open some position to sort of think, okay, if it might go down this much, what should I do? If it's not going to protrude and it comes back down, maybe you will come back down to this level, or what kind of things I could do. So that's what technical analysis does. Nothing more, nothing less. Anyway, if you liked this video, please give it a thumb up. Please subscribe to the channel, and I will see you in the next video.